Right guys, welcome to episode number 10 of the FVT Trading Bootcamp. Now it's free, and if you haven't yet joined the free Discord, the link to that is in the description below, because I'll have a forum there where you can post your questions, I'll answer, the community will answer. But today's video, let's get straight into it. We're going to get into order blocks and changes in the state of delivery. It's a topic that gets asked, it's a question that gets asked all the time, and these two PD arrays, or these two things, both bullish order blocks and bearish order blocks, I use them to trade. So this bootcamp, it's not going to go through breakers and mitigation blocks and vacuum blocks and suspension blocks. Those don't matter to me. It doesn't matter how they print. I'm only using inversions, fair value gaps, and order blocks. So you're going to learn the system that I've learned to become profitable. And order blocks are one of the key things. Now, what I wanted to discuss first is what it looks like on a higher time frame. We'll go to the 15-minute chart. Then we're going to drop down to the lower time frame and talk about price action there. But firstly, I just want to make a quick note about all-time highs. You don't have to trade at all-time highs. Just please keep that in mind. And I might make a video on it specifically, but you can have a day off. Assume bullishness until proven otherwise, but have a day off. Today, when I'm recording this, is the 29th of the 10th. I'm not trading, right? I'm not trading the London session, not going to happen. Anyway, let's get into it. So, what is an order block and what do you need to see? Well, it follows a pattern that looks similar to this, and we'll do both bullish and bearish order blocks. So what we need is this. We need to have a low, we need to have a high, we need to have a lower low, and in doing so, the form of the lower low, let me just mark this out again properly. When we form this lower low down here, price sweeps liquidity. So to form an order block, you first need to have a sweep. That's important. The second thing, you want to look at where the sweep happens, right? You want to look at the leg that produces the sweep. The most recent leg, that's what I'll say, the most recent leg that produces the sweep. So this leg in price, you look at that leg. And in this case, a bullish order block can be one or many candles. It doesn't just have to be one. An order block is not just this last candle, it's the set or one, depending what prints there, the set of candles in that price leg of the opposite color. Right, so in this case, there's down close candles here. Now, when is the order block formed? I use the body of the candles, so the top of the body. The order block is formed, let me just mark this out for you guys, because this is important. The order block does not form until which candle closes? This one here. But it's a stronger order block, and this is maybe something for your notes, when we close with a full body. Does that make sense? Just like a fair value gap, guys, just like an inversion fair value gap. When we close above an inverse fair value gap here, it's better when we have a full body, just not a little wick. The same goes for an order block. Yes, this is an order block right here when we close above this body of the candle, but if it's a stronger close, it's always better. Just keep that in mind. Now, a bearish order block is the opposite. Again, it can be one or it can be many candles, but it's the opposite. So, we're seeing a high up here, we are seeing a low down here, we're seeing a higher high, and notice how we sweep liquidity, right? And we're in the 15-minute chart to start, we'll go into the 1-minute chart a bit later on, but here you can see we sweep buy side liquidity. Now in this case, it's these last three candles. See how there's a red candle here, but then there's three green candles. That's what I want, these last green candles, and I want to look for the lowest body in this run when price closes below that, which would be on this candle here, but probably this one, because see how that's got a really long wick? I don't like that, so I'd probably use this candle. That is when the bearish order block forms. Keep that in mind. So bearish order block, bullish order block. Now, what I want to point out here is that when the market is trending up, and we're going to illustrate a few things, when the market is trending up, we should continue forming bullish order blocks. It's just a statement. It's like a theory. It's a fact. It's actually a fact, not a theory. If we're going to continue to the upside, we're going to continue forming bullish order blocks. So write that down, print it out. If we're bullish, we will continue to close above down close candles, bullish order blocks. If we're bearish, right, if we're moving down on the other side of things, then what should we do? We should continue forming bearish order blocks, right? And we're going to see that now in price structure. I don't use order blocks to enter off. I don't wait for price to trade back into an order block and take a position. I don't do that. I use order blocks purely as a market structure element, And if they form with an inversion fair value gap, with the sweep of liquidity that we've talked about, with the reaction from the higher time frame fair value gap, with all these things, then I use it as a further confirmation or confluence. It's not just one thing that I use on its own. Really important. So if we have a look at this price structure here, right? We'll go through the process again. We come down, we sweep the sell side. We've got these 3 candles here. Price closes above those on this candle, but on this candle here, it's more obvious, right? And then every single time we close above these down close candles, we're forming order blocks. But what is the price doing? It's bullish. It continues to move higher. But why does it continue to move higher? Because these down close candles are people selling. So if we're going to disrespect that, that shows the basic market mechanics of people pushing the price higher. Whether you believe in an algorithm or not, it really does not matter. This shows that whatever's pushing the price down, seller's algorithm does not matter. It's getting negated. It's getting negated. It's getting disrespected. And it's pushing, it's pushing, it's pushing. And you will see in a bullish market, we'll continue to form order blocks. Yes, sometimes we do trade back into them, but I don't really care about that. I don't use that. I would rather just use, for example, this fair value gap. I don't care about the order block. I'm just using the fair value gap. And in this case, we come back into the fair value gap and we push higher. And then what's price do? What's price do? Let's continue this price structure, this price run. Obviously, all-time highs, crazy bullish. We're going to have heaps of bullish order blocks. Sweep some sell side. Cool. Now you got these down close candles here. When we close above that, that's an order block. When we close above that, that's an order block. When we close above that, it's an order block. When we close above that, you get the point. Now, I want to illustrate the difference now. You know what order blocks are, right? But order blocks and changes in the state of delivery, they look exactly the same, but there's a little bit of a difference, So where we form the swing low, these candles here, when we close above that, yes, it's an order block, but it's also a change in the state of delivery. Every other order block that's created is just an order block and it doesn't count as a change in the state. Why is it the case? Because here we're moving from bearish to bullish. So the first order block we create is the change in the state from bearish to bullish. But we already know there's a change in the state now. So every other order block is just an order block. So there's nothing confusing about it, a little bit, but they're exactly the same, right? So the change in the state is the very first order block. An order block is a change in the state, but everything after that is not a change in the state. So hopefully it didn't confuse you guys, but you get the gist, right? The first is a change in the state and an order block, but everything else is just an order block. And so a change in the state of delivery indicates the market might move from one direction to the next. An order block indicates that the market, after changing state, will continue in that new state. So I'm going to repeat myself. I'm going to get rid of this and repeat myself. The first order block created, the very first one, which is right here, that indicates a change in the state of delivery. I'm going to write it up. That indicates a change in the state of delivery, which means we're changing from delivery being bearish to bullish. Once that change has been initiated and we mark out this change in the state, every other order block just signifies the market will continue in that direction. And that's it. And the same will apply for the bearish order blocks, right? And I want to show you an example here too, because this is another question I get. Let me just remove some of this stuff. So we marked out this as an order block, right? This here is your bearish order block. But what is that? What is that also? It's the first order block created. So what is that? It's actually also a change in the state. But it's an order block too, right? And then every other order block created is not a change in the state because we already had the change from bullish to bearish. And what you're going to notice is this. There's going to be some pockets. Take a break if you need to, pause the video, but there's going to be some pockets here in price where it's very choppy. Notice how that's very clean. Here it's very choppy, right? People ask me, well, where's the order block here, Ruben? Is it just this candle when we close below? Personally, I don't do that. When we have a choppy price segment like this, I get the very lowest candle, the very lowest up close candle. In this case, we do that, but because there's accumulation, I get the very lowest up close candle. And when we close below that, I class that as an order block because otherwise it gets too choppy. Right, I'll show you another example too. Let me just keep going back. Let's find some more bearish examples. We're gonna have to go back probably quite a few weeks here. Right, have a look at this, right? So let's apply that same principle on the bearish side and also the bullish side. We've got the sweep of liquidity. The last set of up close candles, when we close below that, what is that? What's it called? It's called a change in the state. That indicates it might go from bullish to bearish. We pair that with inversions, we pair that with macros. We'll talk more about those. Fair value gaps, that's a good trade. Now, when we have accumulation like this, like that, I grab the lowest candle like that. When we close below, there's an order block. Great. Same thing here. We have accumulation. I grab the lowest body. When we close below, there's an order block. When there's no accumulation, it's pretty easy. You form the order block there. And then what happens, eventually, what do? We sweep sell side like this, and we change delivery from bearish to bullish. What indicates that? Well, these last set of down close candles, when we close above that, we've got our change in the state. When we close above these two down close candles, we've got an order block. And notice how a lot of the time, this is a key point. Again, I leave some of the best things until the end because I want people that are watching the videos right to the end to get something extra. You're going to have an order block paired, or a change in the state paired with an inversion fair value gap, paired with a 15-minute gap, paired with a sweep. Those are the best trades to take. And the same applies here, right? We've got the inversion, we've got the change in the state. That's a really strong entry. So is that. Now, as the market prints higher, we close above the down close candle, order block. We trade back down into the order block, right? We push up, form an order block, form an order block, form an order block, form an order block. And order blocks for me are just, if I'm in a trade and I'm looking for the trade to continue in one direction, I want to see order blocks form, right? I want to see price not form order blocks in that favor direction. Otherwise, it probably means that it's not going to work out. That's a little hint for you guys. And let me just go back here. I'm just going to go back to, I don't know, random time and price. Let's go back here, right? And let's have a look. All right, so let's go back. Yeah, let's go back here. Why not? Right. Now, we're going to go back to the 1 minute chart because I want to show you what it looks like on the 1 minute chart. It's all fractal, right? So let me just zoom in here like this. And it might be a little bit harder on the 1 minute chart, but we'll go through it. So, and I'll try to get you guys to, if you can, if you're watching this video, try to answer before I answer. And then from there, it's a bit of a learning process. So what we've got here is this. We have a sweeper sell side like that. Cool. The last set of down close candles, when we close above that, it's a change in the state. Now I'm going to outline something here for you guys too. When price is very messy, what did I say? Use the highest candle or the lowest candle, and we'll talk more about that as we go on. But that technically is a change in the state, and all of these candles that we close above now are order blocks. Now you might be saying to me, well, what about when we close above this down close candle? That's also a change in the state. It's change in the state because it's this previous leg. So some people just use the top down close candle because it's very choppy, and they'll just wait for that to close above. So they'll wait till here to get an entry. You know what I mean? So they'll enter a long position, for example, from here. They'll put a stop below the order block, and then they'll ride that, you know, a 1-to-1 or whatever they need, and then probably get break evened. Other people just use that. Other people just use the order block. So it's a concept where I think it can be extrapolated in many ways, but you just got to go back to the core of the concept. All it means is the market might move from bearish to bullish or bullish to bearish. But you have to pair this with other confirmations. You're not just saying, oh, there's a 1 minute change in the state. Like, you're not going to win trades if all you do is enter just because there's a sweep and a change in the state. You're going to get chopped up in the markets, right? You're going to get chopped. Because same thing here, right? We sweep liquidity, right? The last down close candle, we close above that. But then look, what does price do? We move back down. So we're going to start getting a bit more into detail about price action, and a little pointer, if you want some more pointers, wait for an inversion fair value gap and the change in the state. So for example, yes, you close above this down close candle, but wait for the inverse as well. Don't enter down here, wait for the inverse. It gives you more confirmation. And then what you can do here, you can have a tight stop. So as the price comes up, you trail your stop loss and it's a break even, right? It's a really important thing to keep in mind because a lot of people aren't waiting for that inverse. They're not waiting for that high time frame. They're not waiting for that confirmation. And the same goes for bearish, right? So say for example here, what does price do? price comes up and it sweeps this level of buy side, there's all these little volume imbalances. That's the inversion gap here. But where does the change in the state come? The change in the state comes when we close below this candle. So notice, and this is the interesting part about it, sometimes, I'm going to write this here, sometimes the change in the state comes first. Other times the inversion fair value gap comes first. But the principle is wait for both. That's the principle, wait for both. And make sure you've got a higher time frame narrative like we talked about in the past. Make sure you have other things and not just a 1 minute change in the state, because you're going to get wrecked. Here's another example, right? So have a look here. This is a really good one to go through. So up here, yes, you might say this up close candle, when we close below it, it's a change in the state. But when does the inversion gap happen? That's the question. Well, the inverse doesn't happen till here. But notice how it's just so choppy. So what I often like to do is, yes, we close like that, but I like to wait for a secondary inverse, which is like down here somewhere. And then that's a good entry. Or even here's a good entry as we start to push. And we'll talk more about that. And then you can have your stop fairly tight and then ride it to these lows. So I'm going to go through a few examples, just pick random times on the chart. You know, and here's another example here, just to show you the process. We've got our inverse fair value gap here. We've got our change in the state of delivery here, which I'm going to mark out. You pair that with the inverse. Fantastic, right? Let's go back. Let's go here. This is PM session. We've got a sweep of liquidity. Down close candles here. That's a change in the state. We invert the fair value gap here, which is perfect. That's also a change in the state because it's from this downwards leg like this. That is a CISD2. And when we close above these candles, that forms what we call an order block. So you can start to see it's just market structure. They're not magic pills. They're not magic strategies. They're not, you know, things that if you don't do your study, you can just use without any higher time frame context. You need to use the context. Sweep of liquidity. Again, last set of down close candles. We close above that. We've got a change in the state of delivery. We pair that with a inversion. That's an entry. Boom. Right? Let's keep going. Bearish example. We've got two inversion gaps, sorry. Now, normally I wait, you know, for both to be closed below, especially if it's very close together. Change in the state happens right there. And when we close above, or close below, I should say, when we close below these candles, right, that's an order block. And then when we close below these candles, that's an order block. When we close below these candles, it's an order block. That's fine. It's order block, order block, order block. And the same will go for any session, right? It applies to any session. So hopefully this video has been insightful. I think it's a bit of a longer one again, but we're almost done with the, I guess, the PD rays that I want to talk about. The next one's going to be the power 3. And that's pretty much it for the PD ray. So we've discussed already fair value gaps, inversion fair value gaps, combining those with like liquidity sweeps, market structure, you know, setting realistic goals. We've talked about a lot already, and this is the halfway point. So if you made it this far, you've made it further than I'd reckon 95% of people. And again, if you haven't yet, join that free Discord. There's a forum in there. There's a good community too. And if you want to ask questions, you can also post them in the video description below. But with that being said, guys, stay safe at all time highs. Don't be silly. Don't try and pick a top. Relax, and the rest is the rest. We'll talk very soon, guys. Peace out.